Hello, folks. Bill and Brian here. Yes, we are back after a
Hey,
2 week
hey.
hiatus. So, listen, we've got a lot of things been going on, a lot of traveling going on. So, but we're back today, and today we're going to be talking a little bit why natural gas data is so misleading, and what
Yep.
it's not misinformation, it's not disinformation, it's just information that sometimes you can look at and you go, well, that seems like it's obvious, but sometimes it's not. And so, what we're trying to do is help you, because this is what we do with Energy Rogue. Not only do we provide you with tons of information, tons of data, but we try to take your data and turn it into information, take the information, turn it into strategy, take strategy and turn it into action. That's how we help you do it. If you get any of that, if you're looking at data and you don't know what it says, that's where we're here to help. If you know what it says, but you're not sure, you can confirm it with us and we can talk about it. We talk about the various different things. If you're going, okay, so yeah, I know this is going to happen, but what do I do about it? That's where we can help you with your strategy. And then when it comes to action, Brian and I've done a lot of different things over the last several decades. And so there's a lot of different plans that are out there. And it doesn't matter whether you're doing physical markets or whether you're into financial markets. There's always a plan out there. And some are better than others, but we can help you get one that's specific to you. That's what we do at Energy Row. But today, let's talk natural gas. CH4. It's not really, we don't
Well,
have a good term for it. It should be like, oil's black gold. What do we call natural gas? Invisible gold?
methane or methane, depending on where you're at. Um,
Methane.
if
I like
I,
methane.
I've
That's what people
really,
say. There's no I in team, but there's a me.
I've heard that terminology. I think that's the European explanation. But if you've ever traded natural gas, if you've ever traded energy in any energy commodity, and after the trade you think,
Holy shnikes, it worked.
then you have a little bit of digestion to do today. We're going to talk a little bit about the building blocks of what is important in natural gas, and specifically natural gas trading. And for all the lawyers and nerds out there is a disclaimer down below. We are not financial advisors. None of this is investing advice. This is our own experience of 20 or 30 years of industry experience trading energy commodities. So we are sharing our experience. This is not intended to be trading or investing advice. So read the
Like Brian
disclaimers
said,
down below.
all
It's
disclaimer.
called reading. Top to bottom, left to right.
If you can't sleep, read it. So anyway, when we look at trading natural gas, there's so many of our customers and so many people that we encounter throughout our journey of educating people about natural gas, about crude oil, about heating oil, about 𝐅𝐫𝐞𝐞, all the different energy commodities. Because invariably what happens is you receive a bullish storage report on natural gas. We're going to stay focused on natural gas today. You get a bullish storage report, and in that storage report, the market goes down. So you get a bullish report, it's better than expected, but the market goes down. So the question quickly goes to why? Why did it go down? Well, it's a little more nuanced and complicated than bullish report means price is up. There is a today version of natural gas and a tomorrow version, and we're going to step through that. So digesting the natural gas trading markets, if you would like this document, if you would like this document and you'd like to review it, reach out to us, rogue at energyrogue.com. I'm going to put that banner up there right there. So just reach out to us there and say on natural gas, the trading dynamics, and we will send this to you. So that is what we're going to focus on today. And many people are looking at natural gas, and part of the reason that many people focus on natural gas is there's a lot of volatility there. And in that volatility, you have to look at different factors, and those different factors on trading specifically are going to be rooted in fundamental and technicals. We're going to cover each aspect of it. So, did I miss anything on that intro, Bill?
No, I don't think so. And we got more to talk about when we get to the end about places where we'll be if you want to hear us in person. So we got a couple things coming up.
Yep. And hi, Rebel T. Good to see you. As always, sorry we were off for a couple weeks, but we are back in action. So, when you're looking at the natural gas market specifically, you got to look at supply, you got to look at demand, and you got to look at the market foundation. So when you look at supply and demand, that is the overarching anchor that price will come to meet. So the question is, does that mean today, yesterday, or tomorrow? Which one, Bill? Yes, that's exactly it. This is part of the reason that we established our company, Energy Rogue and Rogue Edge, to provide access so that people could understand, and specifically when they really want to target in on the natural gas market, that they can
some-
actually evaluate history and project that into the future.
Sometimes it's been described
The
as
wizardry school here in America.
Yes. And one thing on natural gas that many have looked to as far as why we have been so bearish is because of this curve right here, which is 2021 to 2025. And I am using our platform, which is Rogue Edge. If you go to energyrogue.com and you select on pricing, you can select 3 different tiers: Rogue Edge, Rogue Premium, and Rogue Advantage. And Rogue Edge is only $89 a month and gives you access to all the charts that we're going to talk about. Rogue Premium, we meet with you once a month and really talk about your strategy, your perspective, and really help you on your journey. But understanding natural gas from the supply side is a foundation. And so you can have supply drop and price go down, and that's because we haven't had enough demand. So you can't look at supply only, you can't look at demand only, and you can't look at storage levels only. It's really all 3, and that is the reason that we actually put this chart together, which is actually, this is my new favorite chart. This is so Bill hates when I say that. So this is my new favorite chart. This tells us how much supply minus demand. And during the summer periods, you can notice that there's periods where there's missing gaps here. That is due to winter time frame. And because when we are above 0, we are injecting natural gas. When we are below 0, we're withdrawing. So that is summer and winter. And when we look at the balance, one reason that people have been looking at this curve on the supply side, which was showing, let me actually point this back up and take this up. So as this supply was going up, I want you to notice one thing. The amount, the peaks, let me take off this production now. The peaks on our injection are dropping over time. So that means our supply and demand is tighter than it used to be, which means, yes, we have more supply, but we also have a lot more demand. And there's a lot of reasons why. We're not going to cover all those details today, but actually, if you want to find out, you can join our service. And this chart right here will tell you which aspect is growing. And I will tell you that power, spoiler alert, is one big component of that. So that is growing in demand. So, but if you want to get
higher
in,
demand grows right now. It's growing at about a 4% per annum rate.
yeah, yeah. I mean, it's big. So you can't look at supply only, you can't look at demand only, and you can't look at storage only. You have to look at all 3 combined together. And so then you look at the economic indicators, the macro influences, economic growth, recession, industrial production. These are things that are factors that you have to look at. Price levels on the technical side, the resistance levels, trend lines, moving averages, volume, open interest. And then you have to look at, is it bullish or bearish on inventory, on cold snaps, on price rises? So when you look at what is happening in the market right now today, you can look at, many people have talked about high inventories. Well, I want to show you something because we were recently talking about that. So people were saying, well, we're 10% above the 5-year average. Well, back in March, we were 35% over the 5-year average. So the fact is, on a seasonally corrected basis, we've actually been contracting on storage. So, so let's see. Rebel T has a good comment. Add to that you have to look at it and forecast it, and that is actually the key. And that is one of the things that we actually focus. We do not publish publicly what those forecasts are, but we do publish in our community what those forecasts are. And Bill, correct me if I'm wrong, but weren't we saying in this time frame right here that we were going to be close to the 5-year average by the end of storage injection season?
Absolutely. And I think what you look here, if you'll give me more years on that storage,
Yeah.
back up as far as you can there. Uh, oh my gosh, we haven't increased storage at all, but demand keeps going up.
Yeah. Yeah, I
So
mean, well, you can look
it
at it
means as
in
demand
terms
goes
of,
up, this is going to get tighter and tighter. And we had a reprieve with a mild winter last year, and so
last 2 years.
and
Yeah.
what's going to happen is, you always end up having to pay for that stuff. But that's why, Rebel T's right. I mean, you got to look at a lot of different things. You could almost say
It's a mystery wrapped in a riddle inside an enigma.
Yes. Well, and that is the reason that we really wanted to focus on this today, because many times we have bullish reports or bearish reports on natural gas storage, for example. And when we have those, that the market may go down. So you
and so I think right here,
all the
Brian,
components.
we can probably sort of back up and let's talk about this. When you talk about technicals, you're talking about short-term time frames. Remember, we talked about when you're saying when is the real question.
Right.
And when you talk about technical trends, you're talking about short-term time frames. What's it going to do today? What's it going to do tomorrow? Then you'll look at it and maybe for a whole week or even a whole month. But when you look at your basic fundamentals, now you're talking about a bigger trend, longer trends that have the basics of the whole industry. And so you got people who own oil and gas looking at fundamentals. You got people who own oil and gas contracts looking at the technicals. And when these two guys collide, it's usually never very pretty.
Right. Well, it's one of the reasons that when we look at price history back in 2022, when natural gas was $7 and $9, we were communicating to our community that there wasn't a fundamental basis in fact, and that price is going to come down. And in my opinion, prices have overcorrected down, and we are going to start a trend back up. We've started that trend back up. So that's just my personal opinion, but this is something that we cover in our community each week, and we talk about supply, we talk about demand. We don't just look at one factor versus last year. We do this to kind of center a basis. But what we do in our videos is we actually break out a discussion of, let's take a look at the history of electric, and let's take a look at which variables are important. And one of the things that when we were entering this summer, many people were projecting that renewables were going to shave off the peaks here, and we're still growing. Electric power is still growing. And add into that, then you have growth on the LNG side. Then add into that you have weather aspects on residential and commercial. And for those weather nerds out there, we have a new website out there, �WXRogue.com. We do not have our subscription active yet. So currently it is in a preliminary beta period. And right now, the premium is free. This will go behind a paywall. We are still working through what aspects are going to be in there and what the pricing structure is going to be. But while we have it, get it out there, because this is free information. And this will tell you how the market will open when you look at the population cooling degree days, the CDDs for the top 5 cities, the heating degree days. This matters, and that is part of the reason that we take a look at all of these factors and really put it into this framework so that we can understand. And you can't look at one variable. You can't just throw this data into an AI and say, tell me the future. It is much more nuanced than that. And the reason that it's nuanced is, for example, Bill, what was the pipeline explosion that we just talked about? Not explosion,
Right. We talked about
fire.
ETC had well, you call it an explosion. They had a pipeline rupture, which caught fire.
Yep.
Down in LaPorte, which is just east of Houston, right there on the bay, on Galveston Bay.
Yep.
And everybody says, "Oh, it's a natural gas fire." Blah, blah, blah. So when you got to the details, it was actually an ethane pipeline, a 20-inch ethane pipeline that had ruptured. What they do is they take block valves, usually within a 10-mile radius, shut it in, let the fire burn out. That's
right.
That's how you fix those things. And once it gets burned out, then you go in and you fix the pipe, and then you start back up again. So it wasn't natural gas. It was actually natural gas liquids, and it was a specific liquid called ethane. Ethane can be blended back into the gas stream if they wanted to, but it has to be done because you have BTU requirements on natural gas pipelines. And so it wasn't the event as if it would have been a natural gas line feeding a processing plant, or there's a lot where these disasters happen is important.
Right.
And
where
they
are, what it means, and what it means to the market. For example, Freeport LNG was massive. That actually accounted for close to 400 BCF of our storage overhang. And
it pumped 2 BCF a day back into the market.
Yep. So understand.
Then you have things like the Permian oil, the associated gas from the Permian is going back in market. And this is the first time it went 42 days as a negative price.
Right.
And so it's finally back in a positive, but not by much.
Yep. So you need to evaluate inventory, what the weather is doing, the particular prices, what the relevance is, and then come up with a bullish factor, bearish response, and the reason, and then evaluate what that market sentiment and speculation. And that these are factors right here, the bearish data, bullish price action. This is when the market doesn't seem to make sense. Okay. But it does if you change your time frame, you change your perspective, or you realize this is a short-term market, meaning it may be focused on technicals when the fundamentals haven't been traded. And that is actually what is happening right now. So,
that's easily observable when you see the fundamentals in the technicals at odds with one another. If you will look at the basis on natural gas from Henry Hub to that is probably one of the best barometers of what's going on as far as the conflict between technicals and fundamentals.
Yep.
Because that there will tell you what's happening on the ground versus what's happening in New York City.
Yep, that'll definitely. And I'm just going to throw up something real quick. This is from our report that goes out to our Rogue Edge members and our Rogue Premium members. And at the beginning of the week, where did we open up the week? we opened up the week on Monday. We opened up at 229.5. And what we said is after making up over 500 BCF, and I'm giving a preview of what our service entails. Seasonally corrected traders finally paid attention to supply and demand, that it's much tighter. If September and October do not overwhelm storage, we may be in for a really, this is my opinion, not trading advice, upside filled winter period. This week is all about 231.6. That is the bull bear line. So I said that on Monday, and you can see we went up, we came back down to that 231. Came back down again. We're now back around that 231. So we try and center that for all the members out there so that they can understand here's the levels that are important, here's the values that are important, and here are the factors that are important. When we look at natural gas, right now we need to be focused on electric power. We need to be focused on weather, which is right here on wxrogue.com. We need to focus on the residential commercial, which is really going to be driven by a lot of winter weather. Industrial is pretty static. That's going to be pretty stable. But another factor on the supply side is imports. A lot of people don't realize they've been focused on production. We've increased our Canadian imports by over a BCF a day. Now add in Mexico has been slowly taking more on from the U.S. on exports. In LNG, we are in the fourth quarter going to be having Plaquemines coming on, right, Bill?
Plaquemines should in the fourth quarter start beginning to do all their testing and filling their pipes inside the liquefaction plant. And so
Yep.
then we should see that. It's probably going to be a slow build, but I think it'll be, I mean, obviously they make money when it's full, right?
Yep.
So the sooner they can get it full, the better. And I think that will probably be by the end of the first quarter in 2025. They should be at close to 1.5 BCF. I think if I remember right, it's 1.5, 1.75, something like 1.7, something
Let's
like
see,
that.
we have that. The timeline is off, but we actually have that down here.
Because I think it's just shy of 2 BCF.
Let's do Plaquemines. There we go. This is right there, and there we go. All right, the timeline is off, but the first in-service should be about 1.76 BCF, and then the expansion is going to add another 8
BCF.
to 900. Yeah.
Yeah.
It's going to end up being about 2.5 BCF a day. Revelty, the winter demand is a big wild card. Absolutely. Seems like winter is over and gone, and that makes for an even 12, which is super bullish withdrawals in a row. Difficult to trade, absolutely, and that's why time frame is super important. And that's part of the reason that when you look at it, are you bullish or bearish? It depends on when. You know, are you bullish or bearish next? Pardon me. Are you bullish or bearish in the next 5 minutes, or the
Right.
next 5 days, or the next 5 months?
So anytime you're in a shoulder month, like we're starting to enter into the shoulder month, in fact, September is the shoulder month. September, October, shoulder months.
Yep.
You're going to see that the volatility is going to be on the technicals, not so much on the fundamentals.
Right.
When you get into winter or summer and the temperature goes extreme one way or the other, that's when the fundamentals are driving the volatility.
Yep.
So that's what you're going to see. So that's why. And then the other side of that is how you come out of winter in storage. If you've had a pretty consistent draw all winter and you come out of storage lower than expected, that can have an impact on the price too. So it's not just one thing. It's never just one thing.
Well, and it's part of the reason
how they all fit together.
It's part of the reason that we established a service to provide information on supply, information on demand, information on storage, plus projections, rigs, maps, and weather, all of this. But what did you say? It's where we end up.
Right.
on the
coming out of the winter.
coming out of the winter. And when was that huge price run up on natural gas?
Oh, look at there. About the
That
same time.
huge price run up was during 2022, and we exited the winter close to the lows. And
Right.
so this was in the consciousness. But when we were looking at this during 2022, this is when we were advising our members that you got to be careful here because the fundamental supply and demand is not $7 to $10.
Right.
So conversely, when we were looking at storage in this time frame and we were evaluating where we were, and yes, we were setting new 5-year maximums, but we started making our projections, and our projections were we were going to be close to, if not at, possibly even below the 5-year average by the end of injection season. And you can see what has played out. So that's why the projections are super important. But these, you can't just throw into an AI model. There is old school technology and information and
Right.
old school evaluation. And again, one of the other reasons that we established Rogue Premium for $179 a month is so that we could have a community that is actually focused on this. We actually have one of our members was the one that alerted us to the pipeline incident. So all of this is super valuable. Plus, we'd like to have fun. Thank you.
We do like to have fun.
we
and,
like to have
and,
fun.
and we do that because, when you're out there looking for information, when you're trying to determine your strategy, when you're trying to figure out what you do.
Wall Street loves to use confusing terms to make you think only they can do what they do.
Yeah. But essentially, and we're going to keep it open for about 5 more minutes for questions. We're not going to belabor the point on, but we really want to ensure that we equip you so that you understand things. And essentially, it comes down to understanding the supply side of the equation, the demand side of the equation, and what is happening to drive supply up or down, because declines do matter. And then on the demand side, our electric demand growth, are we growing there? Residential, commercial, I think Rebelty talked about it. I mean, the fact that it seems like winter is over and gone, that happened this past winter. We had 2 weeks of winter. The rest of it was, when it came down to that. Not, I don't want to say to everybody in North Dakota because it's cold up there. And that is the key, is to evaluate supply, evaluate demand, imports, exports, and storage, but also not where we are today, but where we're headed, where we're going. And this is part of the reason that we established a service with reports, with videos, and with community, so that we could triangulate and understand the market. And I'll be honest, this Discord community is amazing because we have so many people helping everybody, because it's not just about listen to Bill and Brian because they know what they're talking about. It's about understanding what is happening. And I learn something on Discord every single day. So I don't know about you, Bill.
Yeah, I mean, I like Discord. To me, is where we get the chance to vet out even ideas before we implement them. And that's hard to find, that community where you can do that without being put down too bad. I mean, there are a few people we will occasionally make fun of, but that's just because, well, in this business,
There's no crying in baseball.
Yep. There's no crying in baseball, but we track the basis, we track what the forward months are doing, also the technicals, and we actually have trading signals hold on, not trading signals, but we have technical signals that tell us the possible direction of the market, and we evaluate pivot points, moving averages, RSI, MACD, Bollinger, because it's not just supply, it's not just demand, it's not just imports, it's not exports, it's not storage, it's not technicals, it's all of it. And I
Right.
would say time frame is super important for whatever your strategy is.
And
So
by doing this data, you have the opportunity to be able to create your own strategy that's tailored to your business and not
yes.
just doing everything on uh, headline fundamentals.
Yep. And greetings from Poland. Thank you so much. We do have Rogue members in Poland. Would love to see some more there. So thank you. Appreciate you tuning in all the way from Poland. And then Rebel T, if production would start climbing now or to early November, it could still ruin any bull case. I do think the fourth quarter does have some production rise in store. However, I think LNG is going to offset that, so I don't think it's going to be. I think we will see production rise, but I think we will see an offset in demand. So that's what I think. And on
Really?
How come you spent 8 years in MIT to become a cable repairman?
Yeah. So and as far as cuts on production, Rebel T, I will say some of these are over amplified in the there are curtailments that are happening, but these are opportunistic curtailments that are happening intra-week. So that's what oh, and maybe not. Maybe LNG won't offset it. I think it will. But I could be wrong. As we're projecting and prognosticating, and again, this is part of the reason. This is the stuff that we actually talk through in Discord. There are many
Right.
times that because it's not about what I think. That's just what I think based upon my projections. And Bill and I often disagree.
So we
So
do in decline, yeah, because I'm still not convinced that I may be on the Revelty on this side about the LNG. But what I do say is that natural decline on these wells is the same thing as cutting. And when you have new wells, their decline rate can be anywhere from 40 to 70%. And
yes,
so that's where we start to see the natural work. So if we're not drilling to replace those volumes, then the decline will be just the same as a production cut.
yep. Um, let's see. Such a large contango. Okay, I'm going to do crude then gas on this because that is actually a great question. Because I want you to look at a couple of things. I'm going to draw. Bill hates it when I draw. So one thing is on crude, you can see we're at 71, but we enter 2025 below 69. So what this is saying is that we have very large bullish positions right now, but the forward market is expected to be way off. That means that the traders are thinking on crude oil that the economic conditions and the China slowdown is real and that it's going to have even a harder
Brian,
time.
crude has had this angle for 3 years.
No, I know, but what I was really referencing here is the steepness. That's a very large. Normally, I would expect it to look like this. This is 66 to 65. Like have a dollar to $2 over the course of a year. You start to look at what the steepness. I mean, 2025 starts off at roughly 69, ends at 66, and then
I'm gonna
2024.
I'm gonna blame some of that on the illiquidity of the market that far out.
Yeah. So anyway, there's WTI. Let's take a look at natural gas because I think what you're talking about is why we're so steep here. I think that means that we are undervalued here, and this needs to come up. Now, this is where demand and storage come in view. If I'm looking at this, 2025 and 2026 have virtually the same shape. There is a larger spread here, that basically means that the market thinks we're bearish until the end of winter. A bit more bearish than expected. So my expectations, my personal ones, again, not trading advice, is that this is going to reset up. This is going to reset up. This will reset up. This up. And if you want to reach out to us and connect with us on targets or anything,
Right.
just let us know. But I do I do want to come back to one thing on Rebel T, draw baby draw. Another
Not
factor.
encourage him, Rebel-T. Please do not encourage him.
Well, another factor to consider on the supply side on production cuts is the fact that you have LNG coming in from Canada. We have had a large increase in the amount of Canadian imports. I mean, look at this. We went from 5 to 7, and we haven't seen 7 that many times in our history with Canadian imports. You can see it here, 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 and we're consistently right here. So that tells me that Canada has a lot of production, but what's happening behind the scenes is Kitimat LNG is about to come online in Q4. So a BCF to 2 BCF is going to disappear. So anyway, did you guys try to calculate the exact numbers or percentages between fracking and non-fracking? It is like 300% more efficient. Okay, so a little. I think what you're referencing, if I'm capturing the question right, is really about the and I came up with a chart on this because I did this for Nick. Nick had this. So let me see if I can find the right chart. But I do want to talk a little bit about efficiency. So as we talk about efficiency, you have to think about the efficiency gain that we're getting. Back in 2015, we were getting a 30% increase in efficiency for a 10% added cost. Now we're getting a 10% efficiency gain with anywhere from a 5 to 15% increase in cost. So the thing is that the amount that we're spending proportional to the efficiency also has to do with what is it, Bill? Ducks, right?
It's ducks and it's TICs, and it's also the efficiency. And when you mean by efficiency, we're talking about rig. So I'm going to assume you're talking about rig efficiency. And what that means is when a rig drills, how many days does it take? That's that drilling efficiency.
Yep.
For how many feet, and how much oil and gas do you get out of that feet? Now, to be honest with you, it probably has more to do with how many feet you perforate on your fracking as opposed to how long the lateral is, because that's a whole different thing. And how many stages do you frack? I think the most I've seen that I've personally seen has been about 65 stages. And what they do is they go to the very end of the lateral, they frack it, they plug it. They come to the next one, they frack it, and they plug it. Frack it and plug it. They did it all the way back up the lateral. And the laterals are now getting almost 3 miles long.
Yep.
That's 15,000 feet. So they're actually going out laterally further than they're going down depth.
Yep.
Which is fascinating to me. You don't even want to know what that does to the land ownership above that, as far as mineral ownership. That gets even crazier. But so that's where they call it a rig efficiency. But the rigs that can do that are more expensive.
Right.
So you can't just take a rig. All rigs are not created equal. All MMBTUs are not created equal. And so it also depends on, you can take a gas rig that could be more efficient than an oil rig.
Right.
Just because of what depth and what zone you're into. So you have to watch out when you're looking at efficiency numbers, Rebel T, and try to understand when someone says this is more efficient, what they're using for the criteria.
Right.
And making sure that it's not going to be the same all across the United States. You can't take one rig that's efficient in the Permian and make it efficient in the Anadarko. It doesn't work that way.
Yep. And we do track the frac spread over time, which tracks kind of the total rigs along with the frac spread, which is reported here on American Oil and Gas Reporter, and this shows the total amount of frac spreads. When you see that positive, correct me if I'm wrong, Bill, if you see it positive, we're increasing DUC inventory, for lack of a better description, and when it's negative, we're taking inventory out. Is that
Right.
accurate?
Yeah. If you're, and that's what you have to sort of watch is how the ducks come into play. And if you've got, if you're completing more ducks, your rig efficiency goes up because you're not actually using a rig to get that. If
Right.
you are drilling but you're not completing, your rig efficiency goes down. And so that's why we track the ducks.
So, said a different way, taking us back through history from 2017 to today, we had this solid increase in the shale ducks in the United States. We kind of capped out around close to 9,000 rigs. But what happened during COVID is everybody got rid of the rigs, started completing
ducks,
all of them.
Not rigs.
Yeah, I'm sorry.
Yeah.
And the ducks kind of leveled off, but they got rid of rigs out in the basin and just
Right.
focused on completion rigs and completed all their drilled and uncompleted. And if you look, that inventory has continued to creep down. So we don't have a large inventory of ducks, and that is masking the overall decline that we have, which means it puts all the focus on rigs, and our rigs are arguably at a level that if we have some sharp periods up, we are 6 to 12 months away from a significant production response. I know that sounds contrary to what has been out there in the press, but that is what we're seeing. So
basically, it's not just a spigot you can turn it on. That's what you're turning line wells. And so a duct and a turning line well, TIL, is different because the turning line well has already been completed. It's just shut in.
Mm-hmm.
A duct means it hasn't been completed, and they're going to have to spend several $1 million to complete it.
Yep.
But a turning line, they just mean to go out there and make sure they've got capacity in the pipeline to do it.
Yep. So listen, thank you so much. Thank you from Poland. Lucas, I hope I'm pronouncing that correctly. Would love to see you in the service. Join our Poland crew. I committed to our Poland crew that if we had enough members, I would go over there and we'd do a in-person session. So would love to see you inside.
If he keeps drawing, I'll send him.
Yeah, I will. On that, I want to go to Poland. Let's go to Poland. So there, I drew. So listen, Rebelty, thank you for showing up, and listen, for everybody watching right now, I really appreciate everything that you staying committed to us, listening to us each week. We drone on, and I know sometimes it's a little boring. Hopefully we're not keeping it, hopefully we're keeping it fun, and we're not, not boring you to death. So, I mean, that's what we try and do.
But I really don't like it, and I'm not going to go.
Now,
so listen.
So if you missed us the last couple of weeks, hey, listen, we're going to try to be on this a little bit more often, but we got some travel coming up. So that's what really keeps us from being on. Hey, but we do make our videos for our subscribers. And so if you really want to see us, my gosh, all you have to do, I mean, is subscribe. $89 a month, $179 a month. Only, oh Lord, Rebelty.
There we go.
You're creating a monster.
Here we go. There we go. I got to do it with my mouse. So let's see. It's just one E, and there we go. And this is it right there. That is for you. So
I don't know. Somebody's got Rebel in their name. It should belong to Energy Rogue, I think. Absolutely should belong to Energy Rogue.
Seriously, thank you for tuning in, and do us a big favor. Drop us a like, drop us a comment. All of that means a lot to us. And then Rebelty, send us an email at rogue@energyrogue.com. I will screenshot that to you. So listen, appreciate you. I don't have any more. Do you have any more, Bill?
No, we look at a lot of different things, but I just want, we really appreciate you guys watching. And so the only thing I got to say
I'm Ron
is,
Burgundy. You stay classy, San Diego.
So listen, thank you so much. Appreciate you. So glad to be back, and we will see you soon. So thanks, folks.